you like trading GDP USD, but no strategy is working for you? I felt your pain. I understand how you feel. Some of you want to give up. Don't give up. Solution is here today. So today, I'm about to review one of the best simple mechanical scalping strategy without daily bias, without any additional information. It's pure mechanical. Stick around to the end of this video. You'll become a profitable trader after today. Promise. Now, here's the deal. Without taking much time, we need to list the rules that will govern us in this strategy. Number one, I told you this strategy works only on GDP USD. So we trade only GDP USD. That's the pair we are trading in this strategy. Time frame to use, we only need 5 minutes time frame. That is our higher time frame and lower time frame. No additional time frame in this strategy. Only 5 minutes. Now, number 3, trading session, New York time. 8 a.m. to 11:30 a.m. That's the only time we need to be on our chart looking for this very strategy. It's less time consuming, unlike other strategies. Profit target 1:2 risk to reward. I hope this is clear. You only target 1:2 risk to reward. But if you have a strategy on proper risk management on how to hold trades and you manage it very well, you can still hold on more for more profit. But as a beginner, 1:2 risk reward, you will be profitable in a long run. That's how to do it. So now let's dive into the analysis. We only need 2 things here. Pay attention. Some of you, I'll be talking in different dimension. We only need to see a chart pattern called ABC pattern. You understand? So if you are a price action trader, you know what this ABC pattern is. When market makes lower highs and higher low and another higher high. So that's what we'll be looking. So now this is this leg here, from here to here is A leg, which is lower high. Then from here, the B leg is higher low. From point B, we have C, which is new higher high. That is ABC pattern. And most of us who are into smart money concept can identify this very structure here as breakout structure. It doesn't matter what you call it. It doesn't matter how you understand it. What matters is, can you identify this as ABC pattern or breakout structure? Now, if you have this image anywhere or around between 8 o'clock a.m. to 11:30 a.m. That is the time we need to find this ABC pattern on our chart. So once you have that, we need to see markets break off. So once you have this pattern, we need to see markets break off a structure. So this is our breakout structure that completes this ABC pattern. Next thing we need to do is to have a candlestick after market break off a structure. Let's take for instance this candle break off this structure. Don't mind my drawing, just manage to understand this. So this very candlestick break off this structure. We need to see another candle. It's not a must, but I'm just trying to make things more easier and understandable. Let's take for instance, there is another candle inside the zone. We have another candle. So most often as this happen, breakout traders we jump into the trade, set their stop loss below this low. Do you understand? And they are not wrong. So if we see a candle that is sharp reversal inside the zone, it must not be one candle, it can be 2 candle that makes up this event. But if one do the job, that makes it perfect. I hope this is clear. Now, as this candle move back into this breakout structure zone, we now look for retest on that zone. So now as this candle move back into this zone, we need a retest. We need a retest around here, just 50% or any way you find something, but you only need a retest back into this zone. So now here becomes our draw on liquidity. which is our target. Here becomes our target. You understand? So now next candle, as this happens, we set our target. We find short target, maybe 50% of this one. Set our stop loss. Move your SL. Just add 2 pips to avoid to accommodate the spread, because sometimes the market push back into this zone entirely before it can drop off. Then you target 1:2. Then if you have a proper risk management to manage this very strategy, you can target more risk to reward. Then this should be a final target. This B leg, that is the lower, that is the higher low is your target. So this is what we'll be looking for during this window, during this time period of 8 o'clock to 11:30 a.m. of New York time, trading GDP USD. And reverse be the case. So let me reverse this chart for you to see how it will look when you find downtrend. So looking at the downtrend, this is our A leg, which should be our low. And here is a lower high, and lower low is the C leg. We have a break of structure. Candle that break off the structure is this. The next candle follows. It must not be the same way as I'm teaching now. It may be 1 candle, it may be 2 candles, but let it not exceed 3 candles. Do you understand? So we need to see a pullback back into the zone. So you have a pullback back into the zone, then we expecting to see a retest back to here where you are pending order, and here becomes our draw on liquidity. So this is what we'll be looking for every 8 o'clock to 11:30 a.m. New York time every day, trading GDP USD. This is a powerful scalping strategy. Many people don't talk about this because they will only tell you to come to their mentorship, so that they will tell you what to do. So we're sharing for free. You have no reason not to like this video. You have no reason not to share this video. If you comment, that gives me joy, and I like to read your comments. Thank you. So now let's move into live examples for you to see how powerful this strategy is. Hello guys, so let's take quick example on GDP USD. So everything is set here. The pair we are trading now is GDP USD. Time is 5 minutes time frame. Then this very session, this very zone here that is marked is New York session, which is our session to trade this strategy. And remember, if you don't know how to get this, you only need to go to your indicator, search for session by Lewis Argon. Do you understand? Session by Lewis Argon. So once you get that, then you look for ABC pattern between 8 o'clock. So here is our 8 o'clock a.m. So let me mark it out. Here is 8 o'clock a.m. to 11:30 a.m. So these are so here is the time we are looking for ABC pattern. You understand? So on this very time session, on the New York session, we only need to see market give us A, B, C. Then once we have the breakout structure, we want to see the market come back into that zone with a sharp move. Do you understand? Sharp move matters a lot. If market extend more before it come back into the zone, it's not valid setup for the day. So now we have one here, but market did not come back into the zone. You can see we have A, B, C. Market did not come back to the zone. So we are still on timing because it's still 9:40. Then we have another ABC pattern. Here is A, B, C. And luckily for us, we come back into the zone. Do you understand? So we come back into the zone with this very candle here. Then another candle comes, another candle comes, another candle comes. Perfect. That makes it beautiful. So now let's mark it out for you to see. This is our breakout structure. This zone is our breakout structure. We have sharp candle. This is momentum candle. It pushed back into, you see that the momentum candle pushed back into the zone, almost inside our zone. The next candle follows by here, 1, 2, 3 candle. Get us back into that zone. So we are only looking for a retest. That's the only thing we are looking now. We only need to see a retest back into the zone. So as you can see, here becomes our draw on liquidity. This zone is our draw on liquidity. That should be our target. Now you set your pending order. There should be a pending order inside that high. This candle which forms another block and target this. Remember, if the setup did not give you 1:2 risk reward, I think you should avoid it. Understand? This is barely 1:2, but I have to take it. This is 1.96 risk to reward. So 4 pips is nothing. So I can take the trade perfectly. But for those of you who have very good proper risk management, you can still hold the trade and target this high or any high you feel like is safe for you. You can see the market push up to this extent. So if you hold, that is 6.12 risk to reward. So I hope this makes sense. So now we have more example to show, but as my rule states, I don't give more example, but I have to give more to convince you to go and back test and make money. So this very example happens on which day? 2nd May recently. 2nd May. See how good it is. So it's not a magic. Anybody can do that. You don't need any fancy concept for you to become a profitable trader. This is ICT concept, and I like it because it gives you discipline. You only trade with time. Once the setup did not occur during that time period, you close your chart and move away. Next day, tomorrow, you come back. So that's how to do it. Now let me show you more example. Just 2 more example. We are good to go. 2 more example. We are good to go. So be on April 24. Here is another example. Here is another example. So pay very good attention. We have our normal ABC pattern, which is very clear and understandable. Anybody can do this. So where is our ABC? So let me show you. We have A, we have B, we have C. Do you understand? So markets move back into the zone. So let's clear this out because we have spot our ABC pattern. Remember, 8 o'clock. This is 8 o'clock to 11:30 a.m. That's when you'll be finding this ABC pattern. Now, as you have seen your ABC pattern and market have come back, now let me mark it out for you to see how clear it is. So here becomes your breakout structure. This zone is your breakout structure, and market come back into that zone. This is a perfect example. This type I like. This type I like to see. Honestly, I like to see such whenever I'm trading this type of example. So whenever I spot this, here becomes our rated zone. See how market reacted to here. Here becomes your draw on liquidity. This zone is your draw on liquidity. That is your target, where you should be targeting for the day. Now let's see what it delivers as risk to reward. So you target here. This is your zone and push. Just leave few pips below. And the target your 1:2. Do we have any 1:2? We don't have any 1:2, but we need to push it more to get 1:2 because of the high consolidation zone we have there. So you see how it delivers to that side. So if you want to hold it, you can still hold here. If you hold, it give you 4.9 risk to reward. It do happen sometimes. You catch 4.59 risk to reward. So this happens every day on the market. So avoid. Let me give you things to avoid. For instance, if the market show you an ABC pattern, like market show you ABC pattern of this nature, then very huge breakout structure, and market suddenly come back to this zone after this huge move, you ignore it, or market take out this very low before it tap into this very zone of this very high that we should set our pending order. Avoid that trade. You understand? Avoid it. So that's things you need to avoid. So thank you. I think I got to stop it here. Go and back test. Come back and tell me how it's working for you. You see how everything works. It's not a magic. Anybody can do that. You can share with your friends. I don't ask for anything, only like. I don't ask for anything more than your comments and your appreciation by sharing this video. Thank you. I got to catch you up in the next video. I'll be sharing with you quick scalping strategy that can make you more money than ever since you become a forex trader. So thank you and God bless you. I got to see you soon. Bye for now.